Do you find that you have to help owners understand the difference between the way that they have been managing their books, or their accountant's been managing their books in some cases, writing off personal expenses and such within the company? Do you have to explain to them why it's important?
Yeah, we do. And sometimes, it's by no fault of the accountants either.
No, agreed.
Their job is to save you taxes and to write, to find what they can to write off. And they really need to be aware of your exit plan. And this is one thing that we really stress is if you're on that trajectory of a sale or you think you might sell at any time, your accountant needs to be aware of it, because they may do different, have different tax planning strategies for you, or they may report a little bit unique or have different recommendations. They may change how you take dividends or salary and vice versa. Like, it changes the complete context and the perspective of your reporting sometimes. You get into the being a bigger company, or if you have partners, oftentimes the books are cleaner. We work with mostly owner managed companies. So we see a lot of unique things. Recently, we went through the EBITDA recalculations and normalizing the EBITDA, so pulling expenses out that were personal to demonstrate, what the true cash flow is. And we did this exercise with a business owner, and they weren't planning to sell. They didn't do exit planning. They had a situation came up, and they made the decision to make, more or less a career change. And so now we're reviewing this EBITDA number, and we're mapping what's happened in the company in the last few years. And it's really reflecting for them. A lot of business owners aren't, intimately familiar with their numbers. And it really is important to be familiar with the numbers and not necessarily just leave it, to your accountant or your controller, because you're going to be the one that's often answering these questions from a buyer of what was this, what happened there. And they're going to map it year by year and look at your financial statements in a single page or a spread, and they can pick out things really quickly that are inconsistent. And it was interesting when we did this exercise with the business owner. They're going, whoa, we spent a lot of money that year. And it's like, yeah, you had money in the bank account, so you spent it, and you really weren't aware of where it was going. And They're going, yeah, wow, I can't believe we did that. And had no
Who knew?
idea
You should have.
just overspent
exactly.
3 years. Yeah. And this was like, we were looking back and we were going, that happened 3 years ago. And they're like, yeah, I remember that. Like, wow, I can't believe that happened. So
yeah, I get that. Yeah. And I understand that thoroughly, because, if things are going well, they tend to spend more, but they don't think about what the future implications of that are going to be.